Sarah's dead, but luckily I've got a new guest for the show. Come here, boy. Welcome to Jonk does PennyStocking. Welcome to Jonk does PennyStocking. Very good show for you, but I'm not going to be hosting it. I am actually back in England, and the reason I'm in England is because I've had an over-trading problem, and I need to check into Traders Anonymous. So I'm going to leave this show in some good hands. I've done some research. I found the best presenters available in England at this time. And I will just say no more. I'll see y'all later.
I'm Charlotte.
And I'm Jack, and we're your new hosts for this foreseeable future.
This week's show has highlights from multi-millionaire and legendary trader Tim Sykes.
And there's key lessons on AEZS from Mark Crook, and where Tim Grittani banked big like $30,000. What would you buy with that much money?
I don't know. I'll see you later.
Let's start the show.
You guys are pretty lucky, I guess, because it's a Tim Sykes challenge webinar. It's just from yesterday. I was watching the whole thing during the market close because the market was a bit quieter, and there was some really good lessons about paying attention to all of the indicators, not just one indicator, which is something I've been making an error of even after 9 months in the challenge. I need it reinforced, and looking for the volatile stocks and just accepting that you don't have to trade all the time. But these are the main plays, HGG and AKS, both earnings winners. I'll let Tim talk you through them.
The one that I'm watching right now is Chegg, CHGG. Very interesting that it dropped so much yesterday after earnings. And, from 14 down to 12, pretty amazing. And, I thought it was like, wow, like this was an earnings winner, and it looks like it totally punked after hours. And then what happens today? Huge spike from the 12s to the 15s. So don't necessarily judge everything by after hours. I know a few people who shorted this, and you guys were trying to get me to short it. And they're like, oh, it's an earnings loser, Tim. This was an earnings winner. Now it's an earnings loser. And, what happened today? It was down to 13 pre-market, and then right at the open, squeeze from 13.20 to 15.20, all in the first 10 minutes. Now, normally I don't play $15 stocks, but if you remember a few months ago, I was playing Chegg quite often. It's just fascinating for me to see how stocks react to earnings. Do not underestimate an earnings winner in any event, what you do. AKS, though, proves that, guess what? You can't also trust earnings winners, especially on big companies. This is a multi-billion-dollar company that I was dip buying yesterday. It turned out to be the right dip buy. I did not profit on it because it, frankly, was a midday trade, and I don't have that much confidence on midday trades. So I actually cut losses. But the interesting thing, it did finish high, and then when all the longs thought they had won, today it crashes. So long story short, between Chegg and AKS, don't underestimate earnings winners and don't get too over-aggressive. There's like a kind of a fine line with trading, and these are just two examples. One earnings winner surprised everybody to the upside, another earnings winner surprised everybody to the downside.
Yes, I mean, for me, I take a few things out of that. Don't trust price action after hours, especially with earnings. And what are the other things? Don't overestimate earnings winners, especially when the higher price stocks. And just another thing was, don't go for singles in this market, because it's not such a bullish market, especially in the quieter months. I mean, this is what I take away. This is from a Mark Crook webinar. AEZS, Tim Grittani banked like 30,000 on the short side. But the reason I want to show you it is because a lot of people watch the wrong stocks, I notice, especially in the webinars on the challenge. So I want to show this to highlight Like, you want to be playing the stocks that are volatile enough to go from 1 to 3. It's that kind of volatility. So check out this, and then also see how Grittani plays it on the short side and banks 30k.
You know, Grittani is short, and you know, a bit of a risky play. It's definitely overextended, but don't underestimate how far these supernovas can go. This is day 2, so, you know, 2 big green candles, 40 million shares traded today. But the longer it holds up here, the better odds that, you know, stubborn shorts who plan to hold this overnight get squeezed. And this is a very, very good talking point for today's webinar because, you know, Tim's strategy focuses on momentum penny stocks, and this is kind of a lower flow play. It's a play that a lot of people, you know, especially short bias traders, love to bet against early on because it's up too far too quickly, seemingly too far too quickly. But really, it's only up from 1 to 3. And 1 to 3 is, you know, that's a 200% move. But we've seen crazy, crazy, crazy moves, especially in this bull market. And that's what I said in the chat room, that, you know, you get some really crazy moves in this market, especially on low float type of plays. I believe the float on AEZS is in the 8 to 10 million range. Some crazy perks and some crazy squeezes, but it clearly is failing in the 310 to 315 zone. So I would be covering into big washes to the 280s, 290s. That would just be my game plan if I was short in, you know, from the 305, 310 area. I would not swing it overnight. The odds of a gap down are probably maybe 50-50. I don't know. I mean, again, it's only up 2 days. We've seen crazy squeezes. PBMD was one that Sykes was talking about. Let's see.
Yeah, and I mean, it is scary. It's a very scary chart, and but it is ready to come down. And I mean, for me, I don't know what Grittani was playing, but maybe he's risking off high day, maybe he's risking off getting short but he banked big, so I'd watch his YouTube video. I'll link it in the description.
Is Stephen back yet?
It's been 2 days and now I'm really hungry.
I'm thirsty.
We better get paid more than just this.
See you guys next week. Till then, let's get rich.